Welcome, everybody. Another Get Think Tanked Thursday. We're excited to be here. I'm Cynthia Murphy, head of research for the ETF Think Tank. And we have a packed show today with phenomenal guests from Hashdex, which we'll come back to them to introduce themselves in a minute. So Dan, why don't you introduce yourself and we'll go down the chain.
So Dan Weisskopf here, otherwise known as the ETF professor and also co-portfolio manager of Block, and most important for this purpose of discussion, also lead ETF strategist for the ETF Think Tank, where we work with financial advisors, hopefully to help them build better portfolios and better businesses. So that's me. Where'd you want me to go from here, Mr.
David?
I'll take it next, guys. How's it going, everyone? David Chikansky, fellow portfolio manager here with this bunch at Toroso and Title and the ETF Think Tank. I focus on the Be Your Own Boss ETF from SoFi, BYOB, as well as the Amplify Inflation Fighting ETF. Should be a really great show discussing structures, which we all know the professor loves and is near and dear to his heart. So with that, I will kick it over to our CIO and co-founder, Mike Venuto.
Hey, folks, Mike Venuto here. Excited about this show. We have had a lot of news today. I don't know if for those of you who didn't see it, we took some growth funding, so you're not getting rid of us anytime soon. Why do we take growth funding? So we can help more and more entrepreneurs launch ETFs and grow them. So to that end, we actually have a partnership with the Hashdex folks and with Tucrium, who you've seen on the show multiple times. And we worked with all three of the parties to launch DeFi, which is the first 33 Act Bitcoin futures ETF. So we'll get into that later when we talk more with the Hashdex team. Logistics wise, I'm going to put a bunch of stuff in the chat. We do have our drinking word today being currency, whether it's decentralized or traditional or fiat. I'll put the backgrounds in there. We appreciate all the retweets and all the love. And I want to make an intro to somebody new who's joining us today. He's joining us because, one, he's our new chief operating officer, and that's part of all the news that's breaking. His name's Gavin Fillmore, but he's also our Series 3. And for us to talk about a 33 Act product, we need our Series 3 person here. So, Gavin, we love you. Why don't you introduce yourself?
Oh, thanks, Mike. Yes, I am a think tank virgin, so happy to be here and start this journey. But as Mike said, I'm the chief operating officer of Title Financial Group, and we're here to basically help people navigate the ETF ecosystem. And I think this product and this partnership is such a great example of what we do, which is to bring great ideas and great partners together to launch product that's innovative and try to start something new. So with that, I'll hand it over to Bruno Sousa, who is now a friend, but a partner certainly, and somebody that was instrumental in this product. Over to you, Bruno.
Thanks, guys. Yes, I'm Bruno Sousa. I'm the head of US and new markets here at Hashdex. I handle US issues and things in new markets that we're coming to. And brief intro on Hashdex, we'll speak a little bit more about it, but we're a global asset manager focused on the crypto space with funds, private funds, ETFs, ETPs, having visibility of what's happening on the crypto side in many different countries. So that's what we'll try to bring here for the conversation. And we also have from the Hashdex team, Samir Kerbage, who's our CTO and chief of products. So Samir, you.
Hey guys, it's a pleasure to be here today. So I'm chief product and technology officer at Hashdex. So my main challenge here is to navigate the crypto ecosystem, figure out different investment strategies, investment theses, and try to come up with innovative products to provide access to the market. And I think that this product is one of the examples, but we've been building ETFs and funds across the world. In Brazil, we have a family of ETPs in Europe. So that's large part of our challenge here is map out this landscape and design investment strategies for it.
Awesome. So I'm going to kick it off and then we'll let the rest of the group come in. So you all know I love sharing the screen. So hold on here. I'm going to share some of the research we've done with our friends at Hashdex. So let's see, where's that button? There it is. Okay. So this is a Bitcoin mine that we visited together when we went to Consensus. This is all of us trying to figure out how this shit actually works, right? So I bring it up because like crypto and all of this stuff, you know, explaining it, getting to it, it's way more than just creating access, right? It's also about education, right? Similar to the world of ETFs, right? Like, you know, we do this ETF Think Tank thing. Yeah, we don't really make a lot of money on the ETF Think Tank, right? We make our money by helping people grow products and participating in them, right? So I'd love to hear about Hashdex at all, right? Like just how the whole thing came together. Like there's not a lot of firms that get enough money to go launch crypto products and start in Brazil and are still around, right? Like let's start with that and the history and the educational materials and all that, and then we'll go to other topics.
Sure. So I'll take that. We started the firm around 5 years ago. A bunch of entrepreneurs coming from the tech sector and from traditional finance, and so it's a very interesting mix of people from both worlds seeing what was happening in crypto, and all of us involved in crypto in some form. And looking at crypto from the investment side and saying, you know, we are looking globally, there's a lack of adequate products and access, regulated products that, you know, a sovereign fund could invest in, and also retail could invest in. So based on that, we started with the idea of really building ETFs and private funds. We actually started in the US with private funds, but quickly shifted over to Brazil, where a large part of the team is originally from, where we saw on the regulatory side a more favorable landscape, and that allowed us to, you know, create a series of very interesting products down there, private funds, and then ETFs. We launched the first ETF in the world, which is originally in Bermuda, and then it's feeder ETF in Brazil, which is really a phenomenon. It's the second largest ETF in Brazil in number of investors, and that's saying something. And you know, today when you look at Brazil, it's you can say it's the most developed country in the world in terms of crypto products and funds and ETFs. And the same logic is the one that we apply to other countries now in Europe, having ETPs listed in Germany, Switzerland, France, Amsterdam, with different theses, from Bitcoin and Ether to indices like the Nasdaq Crypto Index that we co-developed with Nasdaq, Metaverse Index, Web3 Index, DeFi Index. So really a whole large approach towards crypto investing, and that, of course, coupled with education on a very high quality. I mean, high quality research, accessible research, and something that would be, you know, from a very sophisticated, you know, hedge fund manager to an investor that's just starting looking into the space. How can we be partners in that process of understanding what's happening and going beyond the headlines of, you know, Bitcoin's going up or down and what's happening with this and that. So this is you know, part of the philosophy that we're bringing to the US in partnership here in the product with Rosso and Theocrim, and really our belief in the importance of the sector in the long run. And that's what that we're trying to bring to the public, is what crypto actually means, what it can mean for the world, why you should pay attention to it, irrespective of the investment side, as a technology, as a social phenomenon, why it's important. And yeah, so that's a little bit of the mission. And it's been a very interesting ride, especially having this visibility that we have of how different countries look at crypto. One thing I forgot to mention is that, differently from normal asset managers, but I think more akin there to actually Turo. So we are VC backed. So we have a number of very cool investors from, you know, SoftBank, Coinbase Ventures, Valor Capital, and so on and so forth. So it's really a global approach to crypto investing that we're happy to share here in the US as well.
All right, Cynthia.
Yeah, so before we get into all the conversation about the market and currency and Bitcoin and all the good stuff, I wanted to ask, given that on your website, on Hashdex, you guys portray yourselves as being, bridge builders for access to crypto, and you have this global footprint. So how much bigger of a headache has it been to build a bridge in the US versus other places? Or what things have you learned in some of these other markets that you're either shocked that we're slow to learn here or that is different here? So just if you compare the experience a little bit. And by the way, before you jump into that, thanks everybody who turned on your cameras. We always ask you guys to do it. It's so great to see everybody's faces here. So take it, Bruno.
Bruno, are you going to wear your lawyer hat when you answer this?
I'm wearing the lawyer hat. So and I'll start with that. So I'm originally a lawyer. I'm trying not to be. It's a lawyer's dream. Every lawyer's dream to stop being a lawyer, and I'm getting there. And my first professional contact with Bitcoin was actually here in the US back in 2015 when I was working at Davis Polk, large law firm some of you might know. And something came to my colleague's desk, which was the Winklevoss filing for the first Bitcoin ETF. And when I looked at that, and I was looking into Bitcoin for some time, had some friends really invested in it. So wow, this is true. I mean, this is really becoming something, because we're going to have an ETF very soon in the US. So this was back in 2015. So long story short, 7 years later, there's no spot Bitcoin ETF in the US. And we do have them not only in Brazil, which is where it started, we have them also in Bermuda. And other firms have spot Bitcoin ETFs in Canada and Australia, and also the ETPs in Europe, which essentially work like ETFs and are also spot products. So although these initiatives start in the US, the discussions here have taken a lot longer than were expected. And that applies to the ETF process, which is, the media covered extensively, but it also applies to crypto regulation as a whole. And when we talk to crypto entrepreneurs, some of them that we know for several years here in the West, working with tokenizing securities and, other, very interesting projects, they have been struggling over the years because of the lack of regulatory clarity. And the effect of that is that many firms, US firms that could take a big chunk of this market, which is a global market, are having issues. And you're seeing foreign companies getting a level of importance they probably wouldn't get if the US had been more proactive in the crypto regulation, proper regulation of exchanges, custodians, crypto lending, so on and so forth. So there are 3 bills in Congress now that we hope will be approved in the first semester next year that will probably bring more clarity, but it's long overdue. And it's important, from our perspective, that the US be a leader in crypto regulation and in the crypto markets as a whole, because there are several geopolitical implications to that that we can't overlook, especially in these very troubling times that we're in. So we'll hope. There was an executive order from President Biden in March, I think it was this year, guiding government agencies to work together, get to a consensus, and come out with more clarity. So there's a recognition now that this market is important and that the US should be a leader, and hopefully we'll start seeing that more and more next year. Up until now, it's not been, the US wouldn't be a top 10 in terms of regulation globally. It would be far from that.
If I can complement, I think that's another aspect of this is like the transformation that a spot ETF can bring to the market, which is impressive. It's not just like approving one product. Our experience, especially in Brazil, has been like, we've seen a transformation in the capital markets and how capital markets see crypto after we have regulatory clarity. So just bringing some examples on the capital market side, our ETF, our Nasdaq Crypto Index ETF there in Brazil, is the second most popular ETF in the country, right? So it's only behind the S&P 500 ETF, which is like impressive. With less than 1 year of existence, it was already the second most popular ETF there. Pension funds is starting to allocate and starting to consider allocation. 30% of the family offices in Brazil allocating crypto through our ETF. So that's huge. It was 0 before it. So you see like how it opens the space for institutional investors, but not only on the investing side, but also in the innovation side, because financial institutions could offer crypto, it could start looking into crypto. They also started to experiment with the technology. So we're seeing like regulatory sandbox around tokenization of security. So we have like some projects in Brazil tokenizing securities. We have the president of the Central Bank of Brazil talking about central bank digital currencies, but seeing already that the best venue to distribute them is an open ledger. It's a blockchain, which is something that if you look at the other central banks, they're still discussing how can do this in a closed way. So the space that it opens in the market when you get access, when you get regulatory clarity is impressive. So that's what I think, like in the US, think about like how it's going to be for the crypto ecosystem, for like technology, once the US has more regulatory clarity around like how crypto and capital markets can work together.
All right, so I'm going to chime in, and I'm going to bring Gavin into this one because look, we just went through this process with you and Tucrium to get DeFi out there, and the cat's out of the bag, right? Because all the pundits picked up on it. You know, we did this in a 33 Act structure because a 33 Act structure could hold spot someday. The 40 Acts that currently exist can't, right? They simply can't own spot because the most they could own then is 20% of the portfolio be spot. Even to that end, Gavin and the team and Hodam and all of the folks that work here at Tidal Financial Group, you know, the parent of the think tank, work every day on launching ETFs. We're going to launch somewhere between 20 and 25 ETFs this year, right? But this 33 Act that allows for the actual spot, way harder. Like, I mean, I remember, you know, being a consensus with you folks thinking we're going to have this out next week, or at the ETF conference in January going, this could happen any day. You know, I think it's a better structure, and I've heard Sal from Tucrium talk about the structure for the benefits, and we'll use Cynthia's paper later and talk a little bit about it. But I don't know, Gavin, from the perspective of launching ETFs and making it a step closer to spot and a better tax wrapper, what was your experience on this versus the 40 Act? And maybe if Hodam wants to chime in too, we can bring him if he's got something to share.
Well, I'll start. I'm sure Hodam can add because he did do more of the heavy lift than I did, but it was a team effort. I mean, at the end of the day, I think it comes down to every wrapper, every product has certain complexities, right? Did this have more complexities? Of course it did. But I've yet to launch a product that goes perfectly smoothly, perfectly on time, without any surprises. But sure, when you stack 33 Act, Bitcoin on top of one another, this was far tougher. And I think the really fun part is this is the beginning, right? You can feel like, oh, wow, we accomplished something. We got this over the line, but this is step one in a very, very long process. But we went into this collectively together because we wanted to go down that road. So that's inning one. We've got 8 innings more, and we're going to keep fighting because we believe in the wrapper, the structure, the exposure, Bitcoin, tax efficiency, right? At the end of the day, if you're not building these products for a specific use case and for the end client to get something that's better for their portfolio, you're doing it wrong, right? So just the beginning, but you know, as I always say, Mike, we're in the headache business. Was this a bigger headache? Yeah, it was a bigger headache. But we took some Advil. We'll wake up tomorrow.
Just say currency and have your drink, man.
Adam, you want to add there?
Yeah, I just want to chime in on something you touched on there, being sort of in the first inning. And I think, you know, as you've seen from the press, I think everybody saw it coming. I think everybody knew that this was the first inning, and they knew what we were getting at with this filing and what kind of we were anticipating. So that worked its way through into the regulatory approval process. And it speaks to the level of partnership, but also the level of expertise and understanding of what the regulators are after and market structure that this whole team brought together, that we were able to get over, you know, those hurdles with the regulators. You know, to Mike's point, like we thought we were going to be done with this over the summer. Clearly that was very ambitious. And it was, that constant open dialogue and really understanding where the questions were coming from and what they were looking at kind of going forward in terms of what it meant when this wrapper got approved, in terms of kind of the floodgates opening. And so, we're very excited. I think that was the reason we embarked on this. And it was, the regulator saw it coming. It just added a level of difficulty, but it speaks to the team that we put together that we got it through. So.
I would just add, being first is never easy, and we know that we were also in a dogfight with some others, and here we are. We weren't just the first; we're still the only, right? So that goes to show that others have been struggling as well, and maybe struggling more than we did. So I guess kudos to the group.
All right, I love the victory lap. I love the currency. Cynthia, you want to take us a little different direction, or would you like to share?
Well, I was thinking, the product is great. So should we talk about why should anybody care about investing in Bitcoin right now? Because as everybody know, I have a very troubled relationship with Bitcoin. I bought at the top. I've lost all my money, and my dad, my siblings who live in Brazil are super bullish Bitcoin. They're all investors in Bitcoin. I hear all the time, and I just sit here sour because I totally failed at it. So, what are the catalysts? What are we looking for here in terms of when does this whole thing turn around and why I should look at it again?
Yeah, I think I can start with that. And I think we've been lucky enough to sort of explain crypto and Bitcoin, especially to investors, in a way that that they can make their own conclusions around why this is important. And maybe I'll start with, sometimes you see people saying, "Oh, Bitcoin doesn't solve anything, or doesn't, nothing's created. I can create my own Bitcoin," and things like that. And there are two things there. First is that when Bitcoin was invented, and I'll try not to be too technical here, it solved a long-standing problem in tech, if you want to call it more broadly, which is how can you program digital scarcity? How can you create a digital asset, a piece of digital information that's unique, right? And to make it more tangible, imagine your email. If you receive an email, you can get that email, send it to 1,000 people. It can be sent to over 1,000, and it tends to replicate like gremlins, having a spray of water. So this was always the case for digital information. When Bitcoin was invented through cryptography, I won't get into the details of that. Satoshi Nakamoto, whoever that was, created a way of programming that scarcity, so you can have an asset that looks like a $100 bill in your wallet. If you take it out, you can use it once and once alone, and then the person that receives it can only use it once, and so on and so forth. That has several implications. When you look back, so Mark Andreessen, who most of you might know from Andreessen Horowitz, he's the inventor of the browser. So basically, one of the fathers of the internet, like we know today. He would say that the original sin of the internet was not solving for micropayments, and that a digital currency, native digital currency, would be necessary at some point to be created. And when that's created, it opens up the gates for several new things and innovations, and this is what we're seeing in crypto. So there are several uses to this and things that come from that, and you can go from practical uses today to what it can be in the future. And if you look at practical uses today, if you want to send today $1 billion to Singapore, the easiest, fastest, cheapest way of doing that is through Bitcoin. Like, you can call your bank, you can try to set a wire. That's going to take you a few days. You're going to go through all these things, and I'm talking do it in a very clean manner through a regulated exchange in both countries and so on. So the settlement happens instantly at a very low cost in this sense, right? So this is a solution by itself. The other thing on when you're talking just about Bitcoin as currency is that the discussion around Bitcoin tends to be very US centric and Euro-centric, in the sense that, why do I need a currency without a central bank? I have the Fed, I have the US dollar. US dollar is great. Not as strong as it was in the past, but still, holding up. The euro, do you guys think the euro is great? Maybe you do, maybe you don't. The pound, you're seeing what's happening. So, but still, these are big currencies. What happens if you're living in a country in which you don't have one of the top 5 currencies globally, top 5, even top top 3 maybe, because even in the top 10 in terms of of currencies globally, you're still seeing some currencies there. I said currencies like 5 times, guys. So if you want to have just one drink for it is fine. Even if you look at those, there's not much stability in them, right? And it's a bit intuitive. If I have a debt with you and I owe you $1,000, that's, you want to receive in dollars, you say yeah, dollars. You want to receive in pounds or euros, you say yeah. Swiss francs, yeah. If I ask you if you want to receive in Mexican pesos, you're probably going to say no, give me Bitcoin. You want yens, yuans, you're probably going to say give me Bitcoin. So even in that sense, Bitcoin doesn't have to be the largest currency in the world. But if it becomes a top, the 5th largest currency, the 4th largest currency, that's already, an order of magnitude larger than it is today in terms of market cap. And so these are some of the things that come up. And especially, I was mentioning before we started the call, looking at places like Argentina, Lebanon, Turkey, and people needing to flee their currencies because of central bank controls or just mismanagement of the policy, of the monetary policy. They're seeing an alternative in Bitcoin. In the past, it was just the dollars, right? I lived in Argentina for some time. I have several friends there. People are always looking for dollars. I need the US dollar, US dollar. Because it's a way for you to escape a currency that will be devalued every day, right? So Bitcoin's an alternative to that, P2P, digital, a lot of access that you can't have with physical bills for you to buy the dollar, for instance. So these are some of the things that people should take in mind. And then what happens if this use case really establishes itself and grows and so on and so forth? Like, what's the outcome? And then you have several numbers, but I won't get into that because that's very dangerous territory compliance-wise, saying, well, what can happen to Bitcoin prices? It's always what the journalists ask, but it's something that, there's a math to be done. That what happens is if this becomes one of the largest currencies globally, and that's how we approach it. At least I approach it from my personal side.
Yeah, Cynthia had asked when is it going to turn, but it's really a question of perspective, right? If you're in most countries in the world right now, the last 3 months has been a bit of a protection phase from Bitcoin versus everything else in your portfolio. It's really just from the dollar's perspective that it's, even now finally starting to gain some traction in US dollars. But I think the strength of the dollar has given US investors just a skewed perspective on the downside and lack of protection you've seen this year. Not obviously one for one, but are you seeing, or is it still being coined a protectionist asset internationally, besides for just currency, or is it being sold in that kind of inflationary hedging trend, or is it just solely a risk of currency?
Yeah, and Samir can chime in here too. It's sometimes you say it's not a hedge. We'd say it's an alternative. It's not a quasi hedge. It might be in the future, right? It might come to be that. And I saw Warren here made a comment like one problem I see with Bitcoin is that it fluctuates too much relative to home currencies. That's normally true, but the British pound we saw in less than a month losing almost like 30%. This is people's savings happening, right? And if you look to the dollar, that might be true. Again, if you look to a currency that's not a top 5 currency, it's up there. If you look at what's happening in this year, 2 exceptions actually this year in terms of currencies are actually the Mexican peso and the Brazilian real. And I saw a post today from Shuniara, famous venture capitalist, with a headline about this and saying, when the macro gets too strange, turn to the pros. And this means, because Brazil, Mexico have been in macro turmoil for 40 years. We know how to navigate this. Do central bankers in Europe know how to navigate this? They've never been here. And, any housewife in Argentina or Venezuela can probably teach economists in Europe about inflation, because it's something that you live with and you learn about. So still speculative. Might become more of a safe harbor in the future, but the price fluctuation is precisely because it's in price discovery mode. How much is this worth? How much is this worth if it becomes the big thing that it can potentially be? So that's what explains a little bit the volatility. Yeah.
And just to complement, like, I love how Cynthia asked when it's going to turn, because the question 2 years ago, or in the last price drop we saw, significant price drop we saw back in 2018 was if Bitcoin was going to turn, right? So you see the generational shift, like, and the cultural shift in our society. It's not just like a matter of if anymore, it's a matter of when it's going to turn. And to the point about inflation hedge, like my personal view, my personal opinion is that Bitcoin is currently today, 2022, is not a good inflation hedge. Its investment thesis, or the reason why we believe that this thing can create value over the next years, is that like its investment thesis is an emerging digital store of value, right? So what is this? Like first, a store of value, it has some characteristics that makes it even better than gold as a store of value, like as a medium to transfer wealth across time, right? It is the first time we have a digital store of wealth in our society. So it's a concept that is very new, and it's part of the digital transformation of our society. It's very like hard to even to understand how these things work and how to interact with this. And that comes to the emerging aspect of this. Like the society is still trying to understand how to use this, how to use a digital store of wealth, the concept of digital wallets, infrastructure, all the kind of stuff that needs to be built until we can really believe that Bitcoin can be a good store of value. So that's why it's still emerging. We have a long way until it's consolidated. And that's the big risk. So the risk is, this is just, you know, a consequence of the few years we had with like quantitative easing and a lot of money being printed and inventing money out of thin air. But it also can be a new technology. So the risk is, if that thesis doesn't materialize in 5-10 years, Bitcoin or our society doesn't evolve to use digital assets, to use digital store of value, then this thing can be worth zero, right? But on the other side, the opportunity is, if this can be a good store of value for our society, we're talking about a demand that is significantly higher than the current one we have, and prices will appreciate. So that's the investment opportunity, that's the risk, right? So that's why we see Bitcoin as an interesting investment opportunity, as in a strategic investment in a portfolio, you know, a small allocation for a long-term maturity. And when is it going to happen? Like first, depends a lot on the macro, right? So we're seeing like, you know, who knows? We may be like, we need a digital store of value sooner rather than later, right? We don't know how it's going to happen, but two things need to happen for any new technology to be adopted in a large scale, like for the investment thesis that we anticipate for Bitcoin. The first is infrastructure. So we need to see like infrastructure evolving for this thing to be usable for by people, right? So, and we're seeing this happening. We're seeing a lot of infrastructure happening. Like we're seeing like players offering services. We're seeing the Lightning Network. There's a lot of things going on the infrastructure side. But second is more nuanced, which is the cultural shift, right? So our society needs to get used to this. Just like we're now just like using Zoom and streaming this live to Twitter. This is a very new thing for us, and now we're used to like use those kinds of things. Like 5 years ago, that was probably going to be a challenge, right? So think about the internet. Like using the internet 20 years ago was a challenge. So the cultural shift, the part of like our society getting used to this new paradigm, this new technology, we don't know how long it's going to take. It can be 2 years, 5 years, 10 years, 20 years. That's the big question.
So I'm going to chime in on that. And by the way, timing matters, you know, your length of investment matters. And Samir, you said it exactly right. You know, if I'm in the US, my need for an inflation hedge or currency hedge is different than if I'm in Turkey or I'm in Brazil or some different emerging markets. I think that people here in the US don't fully appreciate that because, well, their dollars are invested in the US dollar. So I've got a home bias. So, but let's take a step back if everybody would, because, hey, I'm the guy who talks about how structure matters, right? Let's walk back a little bit and talk about 33 Act versus 40 Act and why this is so important, because there are certain benefits, right? And we didn't just do this because we could, right? And because we wanted to take the pain. I don't know who wants to lead this discussion, Cynthia, Gavin, or Samir.
Yeah, I mean, so I understand where you want to go, Dan. You want to go away from the Bitcoin and back towards the structure. I think we might be a little bit early. I think there's a little more Bitcoin to cover as to why we're trying to get the exposure. I know where you're going but I think we're early. Can we spend just because I can see Bruno's hands up. I've got some charts to share because I actually am going to disagree with Samir on something. And then I promise we'll come back around. But first thing is, I see Warren. I know Warren, we've teased you for a long time on this. You hate it. You don't see it as a currency. And I understand that because it's not a terribly effective currency at the micro level yet. Lightning Network, there's a whole bunch of things coming. I think it'll change. However, I do think, and this is where I'm going to disagree with Samir. Here I'm taking charts again. I actually do think that Bitcoin, as it stands today, does provide a certain inflation protection, and I think it's because people don't know what the fuck inflation is anymore, right? Because most of us weren't alive. Warren, you were there, but most of us weren't alive when the last inflation happened. And I think we had inflation last year. We just didn't have it in the CPI number, that fake number that they like to throw at us. We were debasing the shit out of our currency last year. And that's when Bitcoin helps. When you're debasing the dollar, yes, a currency that has a finite supply is very helpful. Okay. Then this year we got an increased cost in goods. Why? Because Russia invaded Ukraine. There's supply chain shocks. We got COVID, supply chain issues. We got all kinds of things. That's a different part of the real inflation. At the end of the day, for the average Main Street person, things cost more and their currency's worth less, and they're hurting. That's real inflation. But Wall Street wants you to believe that real inflation is a number called CPI. That's garbage.
And Mike, you're describing supply versus demand, right? Pushing too much demand last year. Today is a cut in supply, essentially.
Right. So it's not really a surprise that this asset, this concept, this technology that has a value based on its fixed supply is having a difficult year when they're stopped printing. And they don't even know if they could. Not only did they stop printing and have a difficult year here, it's trashed treasuries. It's given Gaiad an aneurysm. It's given equities a colonoscopy. Like so the fact that Bitcoin isn't down more is amazing. Especially when it peaked so well last year. And like I love this chart from Citibank. This I feel does go very much in line with what you were describing, Samir. Where is Bitcoin in its adoption cycle? We're in 1998 of the internet. We got a long way to go, right? So the idea that you want to be able to buy your cup of coffee with it right now, yes, could you, should you, what are you, crazy? Like this is an asset that could be worth, yes, 0 or yes, millions. Why would you waste your time buying a cup of coffee with it? Right? You want to build the base layer. So for me, I'm always a big believer in the first people you can convince about Bitcoin are the gold bugs, because there's so many similarities. But as Samir was saying, there are these differences that do make Bitcoin a superior, right? The best one, I think, is the protection. Like I keep my Bitcoin in cold storage and in our DeFi fund, which I can say I own because I tell everybody, if you want to see what I own, go on public. All of my trades are publicly available. Gaiad and I went to the money show like a year ago, and this gold bug guy stands up and gives a speech about his gold, and he holds it and he says, "Where's your Bitcoin?" and all this shit. He didn't know that I'm, a native New Yorker. And while he was sitting down, I stole his gold coin. And then I got up on stage and said, "Can you steal my Bitcoin from me off my phone?" He goes, "Of course not. It's encrypted. I've got my cold storage wallet and all this stuff." I said, "Well, I already stole your gold coin." And I pulled it out of my pocket. So there are these places where the ability to store wealth and transfer wealth, it adds massive value. So I didn't have a question. I just went on a currency rant. I'm going to let Bruno or Dan or go wherever you guys want.
Just to complement, like when I see a question here around like Bitcoin being a good currency, and like the first thing we need for a good currency is a good store of value, right? And you're right, like you can't have a currency if the price is like it's dropping 60% a year. Although we're seeing this in other countries, but like we're not seeing good currencies around the globe right now, right? So, but the question is like the first thing that needs to happen is infrastructure evolving, cultural shift in our society for Bitcoin to be a good store of value. After Bitcoin is a good store of value, then we can have a conversation around using Bitcoin to pay for a coffee, right? Because we will have infrastructure, people will get used to this cold wallet and having like a digital wallet in your cell phone and not the analog wallet and credit cards. So like first thing first, this thing is a generational shift. It's not going to happen in 2, 3, 5 years. It's a generational shift until we can see Bitcoin as a good currency itself.
Yeah, and I love Warren's question. I think Warren's representing the other Warren, which is Warren Buffett, who's a very well-known Bitcoin critic. And these are great questions, Warren. But I think there are some pretty good answers to it. So you mentioned here that you need a country to accept Bitcoin as a currency, not considering Ecuador or Peru. I don't really agree with that because most of the countries globally, they don't accept the dollar, the US dollar, for the things that matter, which is collecting taxes. And remember here, the modern state is built on a monopoly of 3 things. The control of police violence, which only, the police power, let's call it that way, which means police plus army. The monopoly of issuing currency and the monopoly of charging taxes, right? So you're not going to see several countries adopting Bitcoin because opening up your sovereign power of issuing currency, that's giving up one of the legs of the tripod. And even today, when you look at countries that accept the dollar, or the dollarized countries, actually Ecuador is one of them. This means that the central bank just gave up and says, I'll let the US create my monetary policy. And these are usually semi-failed states. It says, that you really stop doing that. That doesn't mean it's different from a country having that as legal tender from you being able to have contracts in that currency. In most countries, you have some freedom to have a contract in a foreign currency, right? Or in relationships between private parties, you making a payment in something else. So if you go to a different country and says, I'm a US person, you're a Mexican person, you're a French person, let's do our agreement in dollars, usually that's lawful, right? So this is much more about acceptance and how much people accept it as a means of payment and as a means of exchange. So that's what Samir is talking about. It'd be interesting to see over time. Today you're talking about the proto store value being a big thing. Once we start going into this mode of money, it's still like probably for larger transactions before you're going into coffee. As I said, a big FX transaction today is more effective using Bitcoin. For your coffee today, that's not the best option, but let's see how it goes. So it's a work in progress, as are all technologies, right? We just as we couldn't judge the internet in '95 by what it had there, static pages, and imagining what it was going to be, you can't just judge Bitcoin because of its limitations today. And I'll just close on one thing. We are very attached to the idea of money as we have it today, but publicly issued money by a central government, this is a very brand new experiment in society. This is from a central state that says 250 years old, something like that, right? And until 1930, 1971, when you had the gold standard, you still had some form of convertibility from the dollar to gold, which wasn't one for one, it was maybe like a third to one, and then it became zero. Right? And that was because the US were in trouble. Nixon raised his hand and said, I'm blowing up the system. And this is an experiment of the past 50 years, which has worked very well for the US, and mostly very badly for the rest of the world, right? So how, and when you start looking at these things, say, well, this is a big macro shift, because if you're seeing the dollar getting stronger, like the US really the basis currency, but because it is the last currency, the reserve currency globally, it's still not seeing those effects deeply. It's seeing some inflation, but it's not out of control inflation, 40% a year, 50% a year, because the rest of the world is still in bad shape. But if you look at the size of the US debt and how the US has fueled its economy over the past 30, 40 years, a lot has come from the monopoly of the world global, of having the world's global currency, right? And these are things that, you know, these are on people's minds, right? And so when you have a shift, you change the paradigm, everything changes. There are a lot of people in countries that would benefit from the US dollar not having the status that it has today. So, you know, we shouldn't assume that the dominance that the dollar has today, or that, you know, another 2 or 3 large currencies have, will continue in the next 2 or 3 decades.
Okay, Weisskopf, let's go to Santiago and then let's go to your question, man, because we're getting close to the time to come back to it.
I had another question.
Sounds good. I'll keep it brief. So for those of you that don't know me, I run our distribution and client relationships along the East Coast for the title ETFs. So I just want to speak a little bit about what I encounter from the advisor community and the general consensus that I see from them on Bitcoin as an asset class. So the general consensus really is that the advisors aren't really looking at Bitcoin as a currency, not as a hedge. They're looking at it as a risk asset class, right? An alternative risk asset class that is actually quite volatile. But with that being said, I am very bullish on the future of Bitcoin just because, well, look at this year. It's the worst year on record for stocks and bonds combined. I think that traditional asset classes are likely to face additional challenges in the months ahead, let's say next 6 to 12 months, and at least until the markets have some more visibility. And at the end of the day, if you want a truly globally diversified multi-asset portfolio, Bitcoin definitely plays a role in that. From a portfolio construction standpoint, I think people need a lot less exposure than they think they need to get the benefit out of Bitcoin, to make these traditional asset classes act like they should in a year like this year, or in a year like 2020. And for retail investors, I find that the best way for them to get in is to just dollar cost average in like they would for their 401k.
I love it. So you kind of took the Bitwise approach to it, or Matt Hogan's CFA approach. Not to give them credit because we're going right head to head with them, right? But I know Hashdex folks, before we go back to Weisskopf on the structure issue, what's your thoughts on what you hear from the advisor community?
Yeah, no, I think like we see the same way. Like Bitcoin currently is a risk asset, and the way like to think about this is a structural strategic allocation for the long term, right? So it's a real small allocation, like and you said it right, Danielle, like the impact it can have on your portfolio, like it's a small allocation. We're talking about single digit, like very small allocation can make a big difference in a portfolio. So we're not really looking into like Bitcoin as a good currency right now, although it can be in some countries, in some realities, in some, you know, in some context. What we see the opportunity now for most of the investors is seeing this as an investment opportunity for the long run.
So,
all right, Professor.
Yeah. So I did an interview with Greg Foss, who I actually consider a maximalist, but smart strategist, and definitely somebody who's out there. And you know, I get the whole inflation hedge, and Mike, I'm not sure I completely agree with you because, well, it hasn't existed since inflation, right? You know, it's a short track record. But having said all that, the interesting context that he presented it as is as an insurance element, right? And I often think about it as either insurance, because the math should work, right? You know, this is kind of like bringing an umbrella when you know it's going to pour, right? So the math should work as a hedge, but I wouldn't necessarily use it as a hedge per se, right? But alternatively, look at it as a technology, because it is definitely going to be disrupting things. Connolly, do you have a question? I definitely want to open it up to you if you do have a real specific question.
No questions.
Yeah, okay. So I guess I've got two questions, Samir and Bruno. In Brazil specifically, with those people you talk to there, do they look at it as in like an insurance if they're wrong, or do they look at it because they're really feeling the impacts of inflation? And I think that is so often not appreciated here in the US because we haven't had a taste of inflation in decades.
I can start with an anecdote here. One of the largest, the Pope of macro investing in Brazil runs a very successful fund. This is one of the most successful funds globally in the past 30 years. It's called Fundo Verde. And he's called Luis Stuhlberger, right? And this is a guy that's been delivering returns, Samir can correct me, but it's something in the lines of, average 20% a year on the dollar for the past 30 years. And the way he framed it, and his fund had a big investment in one of our ETFs there, something almost like $80 million or $90 million or something. And the way he framed it at some point is as, we might come a day in which all of these bubbles that we live in, all of these distortions that we live in, they get corrected globally. And when that happens, the way he called it was a collar plan for the world. The collar plan was a plan, an economic plan, tried to tame inflation in 1990 in Brazil, in which essentially the government came and seized assets from the people. Okay, they seized their savings accounts. And this was trying to control inflation, right? So if you have a scenario of global inflation just running wild and crazy, there are some things government might try to do. And these include radical things like that, which might not be as direct as taking out savings accounts, but just a general bringing down of the economy and actual, reducing net worth of people and the spending power of people. So looking at that, this is a guy that's a lot smarter than us. He says there is a case that if that happens, assets, real assets like Bitcoin, like gold and stuff, they would have a major importance and would appreciate heavily. So that's a way of thinking. And then you can talk about small investors, but I think that's an interesting example from a guy that would be probably like Ray Dalio is here. And by the way, you're seeing Ray Dalio, Paul Tudor Jones, Stanley Druckenmiller, legends here in the US saying the same thing. You look at what they're saying and say, this is what Bitcoin can be if it becomes that, if always with that thing, and then linking back to Samir, this is not going crazy. It's a small portion of our portfolio for a tail scenario in which things go very strange and it just, it gains an importance that it doesn't have today. So Samir, what's up?
Yeah, no, like what I can say then is like, it's like being in a global asset manager, we talk with investors from all over. And one pattern that I see is that it's way easier to have those conversations in emerging countries, in countries that have a history of high inflation, that saw like government seizing assets, for instance, or money debasement in a large scale in our lifetimes, right? Because like Michael said, it didn't happen in the US in our lifetimes, right? So we don't have this in our memory, in our recent memory, but we have this in Brazil. There are countries like Argentina, Venezuela, like in those countries, it's way easier to talk about like a potential digital store of wealth that is censorship resistant, that you can put in your pocket and take it everywhere. And it's this, by the way, it's the same cost to transfer $1 or $1 billion. It doesn't matter. You can store in the same like small digital wallet, right? And that digital wallet can be a paper, can be a piece of paper, can be a memory, right? You can store money in your brain, right? Think about this. So like it's way easier to have those conversations in countries that have a history of hyperinflation, because like people felt this in their portfolios, in their wealth, in their, like their assets. So it's definitely easier to talk about the investment thesis, but Bitcoin, like seeing here in Brazil, has been mainly used as a actual store of wealth, because it's actually like we saw some turmoil in Brazil a few years ago, so there was a lot of like and we have capital controls. It's hard to buy US dollars. It's easier to buy Bitcoin here in Brazil than buying a US dollar, right? You have less capital controls to buy Bitcoin, for instance. So we see some of those, but like most of the investors we speak with, they're really looking for the long-term investment thesis of Bitcoin as a technology and what it can be in the future, more than currency speculation.
Yeah, so before you jump in, then I was just gonna say, like, I remember the 90s when the savings disappeared. I remember the panic in my house. My parents were freaking out. And hyperinflation. I mean, I'm probably older than you guys are, but you know, I was middle schooler back then and knew everything was really dramatic. And so, but at the same time, that's why people like my dad are investing in Bitcoin, and for better or for worse. I'm not sure he knows what he's doing, but he's doing. But you know, maybe that's what will take here for it to happen. The catalyst we were talking earlier, that whole sentiment push. And you guys have some great research on factors in Bitcoin. I don't think we have time to get to all of it. The momentum factor and these elements that are really important in Bitcoin. You know, maybe if we live a collective pain, if this inflation lingers and we, you know, in the US start to feel things that outside of the US we've known as a lifestyle, really, it will be what it takes for Bitcoin to find its next leg up, you know. But back to you, Dan. I didn't mean to interrupt.
Well, I mean, we're coming towards the end. I do want to hit on some of Dan's question, because we do want to make it clear we are proud of what we created here, right? So what is it, right? So DeFi is a ETF. It's a 33 Act ETF, okay? And they are different, right? So what makes them different right off the bat? You will get a K1, okay? That can be a good thing if you're a taxable investor. It can be a nuisance for the small retail investor that doesn't want to deal with it. But for the investors using the current Bitcoin future funds out there, they're paying a tax even if they don't get a gain, because they're passing through a 40 Act vehicle as opposed to using a vehicle that's designed to pass through the gain when you sell it. So when we partnered with Teucrium and with Hashdex to build DeFi, or to take DeFi and get it launched, that was our thesis originally, was a more institutional, proper structure for the holding of Bitcoin or exposure to Bitcoin on behalf of clients. I put a link in the chat to a piece that Cynthia wrote on this subject. It's not about this fund. It's about the issue of 40 Act versus 33 Act. The secondary benefit that we looked at afterwards was, oh, wait, if we do this for the institutions, the more tax advantaged K1 approach to it, this is the vehicle that could someday also own spot. And you'll hear more about that from us over the next coming months. I don't know, Bruno or Samir, do you want to add anything to that? Or Gavin, do you want to have a last word on structure there?
Well, it's stating the obvious, but it's great for family offices, right?
Yeah. Anyone else before we wrap up?
No, I would just say that, you know, every wrapper has its unique advantages. There's never a single perfect answer, right? So some wrappers are better for others. Other wrappers are better for somebody else. But at the end of the day, this has a distinct advantage, especially when it comes to taxation. It's nuanced. You have to research it and understand it. But when it's applied in the right way, it can be a massive benefit. And that's where this starts. And hopefully it ends at a very, very, very different place, right? Which has a tremendous benefit. But that's the fight that we're just beginning. But we like to fight a little bit, right, Samir, Bruno?
Collaborative disruptors. That's what I called this on Bloomberg the other day.
That's a better way to say it.
Yeah. All right, so I've put plenty of links in the chat on how you can access information on Hashdex and the DeFi and Cynthia's paper. And if you want to go mint an ETF nerd and all that fun stuff that we always like to put in there. I'm not sure if who we've got for next week, but I've really enjoyed this show. We'll have the distilled out next Tuesday with a summary of all this, with definitely a quote from Gavin. And I don't know, Samir or Bruno, any last words as we wrap up?
No, that's it. I think, you know, thanks. It was a pleasure being here. We love discussing these things. It can go on forever. But, you know, I think the main key that we try to instill in investors and people in general is like, stop, you know, pause, take a look at a deep look at what's happening in crypto and Bitcoin. Go a little bit beyond those regular headlines. There's a lot to learn. You know, there's a lot of material we'll be sharing with the public to educate them, but it really beyond what we're doing, there's several great sources. If I can recommend one, it would be Andreessen Horowitz. They have a great website on crypto and crypto basics and videos and things like that. There's some very cool things. In the Hashdex website, there's also a research center with a lot of material on crypto, Bitcoin, and so on and so forth. So it's more than anything, it's very interesting. It's a very interesting social experiment, and it's really worth paying some attention.
Yeah, no, it was very fun, the conversation, and I normally say that it took me some 5 years to understand the power of blockchain and why this thing is a good investment. Like, I started studying crypto around 2011. Only 2016 I saw the value of this and how transformative it can be to our society. So I usually say that my mission here is try to reduce this time with people, right? So make people see it in a shorter time frame, which is very challenging. But what I can say is that Bitcoin is only the beginning. It's just the first use case of blockchain. Crypto is way bigger than just Bitcoin. So everything we spoke about here is only the beginning. I'm not a Bitcoin maximalist.
Whatever, another currency. We love you all. We'll see you next week.
Thanks, everybody.
Thank you.
Bye.
Hey guys, thanks everyone.
Good.
Bye-bye.
Bye-bye.